This moment is called a flight to safety.
Investors sell risk and search for safety.
This moment is called a flight to safety.
Global capital rushes toward the safest assets.
Assets the world still trusts.
The first safe haven is U.S. government debt.
Investors across the world buy these bonds. As demand rises, bond prices move higher.
And yields begin to fall. The world trusts this market for safety.
The second safe haven is the US dollar.
It is the dominant currency of global finance.
In times of panic, global demand for dollars rises.
Because the dollar provides global liquidity.
And that demand pushes the dollar higher.
Another historic safe haven is gold.
Gold is different from bonds or currencies.
It carries no credit risk from any government.
And investors buy it when trust declines.
Because gold exists outside the financial system.
Some currencies also act as safe havens.
The Swiss franc is one of them. The Japanese yen often attracts global capital.
These assets respond differently to different fears.
Together, they form a hierarchy of safety.
At the center stands the U.S. Treasury market.
It is the deepest bond market in the world. Backed by powerful financial institutions.
And supported by the credibility of the U.S. government.
This is the foundation of global financial safety.
But safe havens appear only when fear rises. Markets can shift in seconds. Even safe assets can experience stress.
During crises, investors sometimes rush for cash.
And central banks step in to restore stability. In moments of panic, global capital begins to move.
Portfolio managers begin reducing risk exposure.
And much of that capital flows into treasuries.
The dollar strengthens as demand for liquidity rises.
And gold attracts investors seeking independence from the system.
Safe havens reveal where global trust still exists.
Quantum overprices.
and capital flows toward the assets investors trust.
When uncertainty rises, that trust becomes visible. Because trust is the foundation of financial safety.
Safe havens are not magic. They reflect the fears of investors. When uncertainty grows, capital seeks protection. And investors reorganize their portfolios.
Because survival becomes the priority.
Safe haven assets measure global confidence.
They show where capital feels safest.
And where markets believe stability still exists.
In times of fear, portfolios rotate toward them.
Because safety becomes the most valuable asset.
Across the world, investors watch these signals.
They study where capital begins to flow.
Because these flows reveal rising fear.
And fear reshapes the global financial landscape.
In those moments, safety becomes priceless.
Traders watch these assets for early warnings.
Because they often move before the economy does.
They reflect expectations about the future.
And sometimes those expectations signal danger.
When they move, the world pays attention.
Most people never notice these signals.
But investors study them constantly.
Because they reveal where global capital is running. And what the world still trusts. In times of fear, money runs toward what it trusts.
Across the world, investors watch these signals.
They study where capital begins to flow.
As funding pressure intensified, attention turned to the Federal Reserve. The New York Fed monitors the daily flow of liquidity in
And fear reshapes the global financial landscape. In times of fear, money runs toward what it trusts.